You're watching Nivesh Kar Befikar. There has been a lot of buzz around the new age ULIPs or 4G ULIPs as we are calling them. They're cheaper, but we must tell you that these are bought online. Some of the dramatic changes that have been brought into the new age of 4G ULIPs are things that we need to understand. Today, joining me is India's leading certified financial planner, Surya Bhatia, to demystify and tell you what these 4G ULIPs are all about. Surya, this budget had this really tectonic shift, right? Because we were all, and a whole generation was used to the fact that there was no long-term capital gains tax. The budget has brought that in with a 10%. Of course, there's the grandfathering up to 31st of January of 2018, but it has included direct equity as well as mutual funds, but not included ULIPs.
That's right.
Now, we've been talking about the charges having gone down. We've been talking about how over a long-term period these work very well for you. How important is the fact that long-term capital gains tax is not applicable to a ULIP?
So it's important, huh? It's actually really very important, because when you talk about any product, what really matters to an investor, it's what's the return I get in my hand, bottom line. So therefore, if my other asset classes, and mind you, similar asset classes, because low cost, I'm assuming the same cost structure, low expense, and having a similar equity structure. One giving me similar return, assuming the returns are same on across both platforms, but the other portfolio holds an edge of a 10% absolute return. Mind you, Vivek, it's an absolute taxation. It doesn't offer me any indexation benefit. So a 10% over a good compounded return over the next 10, 15 years, because that's my holding in ULIP, and that's what I have to compare when I talk about a ULIP versus any other asset classes. So a 10-year portfolio means I'm having a 15% CAGR, if I can use that percentage as a from a discussion point of view. Then a huge 1.5% earned every year on year is my tax component that will actually shave off a lot of my money. So therefore, it will make an impact. So look at as an investment class, this is start holding an edge over a period of time, but we really don't know till how long this will continue. Maybe it's an anomaly, which we really can't be sure about. So while the going is good, look at this as a product, as an asset class, which you can create for your long-term needs, advantage of your goals, of your retirement, with helping you on a taxation benefit. That's a killer.
I want to explain this to viewers in a little more simpler way. So for example, you start investing today and we are saying you invest for 20 years, 25 years, 30 years. 30 years down the line or 20 years down the line, you've built a corpus of say 5 crore or 10 crore, right? 10% would mean that if you've built wealth up to 5 crore and when you cash out, you'll have to pay a tax of 50 lakh rupees. Right?
Absolutely. I just
the number
tweak
that
it a little bit, Vivek, over here. My corpus is 5 CR. My gains, assuming I've paid a 10-year payout terms of, let's say, 10 lakhs a year. So if I even have paid 1 crore, that fourth year of capital gains, my incremental gain I earn, I end up paying 40 lakhs as taxes on this. And that's a serious amount of money. It's a serious amount of money.
Yeah. Though you can say that on a 5 crore gain, it's not so much, but yet.
I don't mind having a 40 lakhs at my end, honestly, Vivek.
Right? And especially when you are actually doing that long-term investing for, say, your child's education or for retirement.
It really matters a lot.
It matters a lot.
Absolutely.
It's a big amount. Thanks for watching. We'll be back with a lot more on the 4G ULIP.